All right, everyone, here we are with ticker symbol NIO, NEO Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So I'm going to talk about this a little bit narrowed down. We're going to zoom in and see what's important in the last couple hours of the day, as well as what to pay close attention to also if it breaks through these resistance levels or supports for the next coming days. I mean, if we zoom out here, NEO has been in a sideways movement. I have stated in my previous videos how it's been doing sideways movements for some time. It does it for about 3 weeks to a month, and then it does it again, and it rises up, it does it again, and it rises up to a newer high. And that's what we're seeing right now, a sideways movement. And my question has been, will this catalyst continue in the sense of, okay, we're in a sideways movement and we're about to hit newer highs when news comes out or earnings and so forth. That's just showing me how NEO is actually organically growing as a company and how the potential is there for this to continue to rise and hit newer resistance levels for the months to come and even years to come if it continues to deliver what it's been delivering to all its investors. And it's just showing good signs of a healthy trend. But let's look closely here what's going on with NEO right now. So the 50-day moving average is 2166. That's an important number. If that gets broken through, this could be on its way down to newer lows and newer support levels. Now, there is an important number here before this bullish run jumped up, leveled off, and slightly dipped and resurgence of the bulls, getting it back up a little bit to 2183. It's down here. This is the lowest point before that run, and that's 2148. I'd write that down. If this gets broken through, this could be on its way down to newer support levels and newer lows, but that's not as important right now as the support level we're about to zoom in on, but you can write it down to have it as a point of reference. Now, in one of these bearish candlesticks, it hit a high. That was an incredible high here, but it still continued to fall of 2217. I'd write it down just to have it as a reference. If it breaks through that, this could be on its way up to newer highs and so forth. So keep that in mind. But that was a bearish candlestick, so I wouldn't really take that as a point of reference to say, okay, well, that got broken through, the bulls can continue to break away. I'd actually use one of the last ones that just previously happened, and that was up here at 2244, but that's way further out, and it could be a little too much of a broadness there, but you can still write that number down and have that in mind as well. But let's zoom in here and see what's important for tomorrow. So this created a rejection here after falling down, hitting this point of reference here of support and bouncing back up. It got rejected fairly quickly, and it only lasted for 30 minutes, and within an hour and a half it leveled off at 2183. So let's look at this resistance level. This resistance level is so important for the bulls right now. They need a break through it because it's fairly close to where they reached when they had this run, and it leveled off before falling again throughout the day, and that's 2195. The bulls are going to want to break through 2195, turn that into a support, and break away from it to hit newer highs, newer resistance levels, and move further away from the 50-day moving average in an upward direction. So I want to emphasize that the bulls need to break through 2195. It's super important that they break through this so that they can reach newer highs and newer resistance levels. This is so important right now because the 50-day moving average could start to catch up to the price and get the bulls into bearish territory by default. So they can't continue to hang out sideways. They need to break through 2195, turn that into a support, and start to reach newer highs, new resistance levels, and pull further away from the 50-day moving average in an upward direction. Now, the bears are going to want to tear through the 50-day moving average and the first support level in bearish territory, and that bearish territory support level is 2162. If the bears accomplish this, they accomplish two things. They broke through the 50-day moving average, getting into bearish territory, and they broke through the support level in bearish territory. That's the bears' goals, and that's what they want to do. They want to tear this one down, hit newer lows fairly quickly, and start bringing this one down to newer support levels. So The first support level is 2162. Now, before it reaches 2162, I'd pay very close attention to how quickly they started reaching closer to the 50-day moving average of 2166 and how it's reacting between the support level and the 50-day moving average. Is it kind of hanging out in between and not touching the support, or is it fairly quickly going down? It touched support and even broke through it within one of the time frames, because if it breaks through the support, that just means that the bears have already gone into the 50-day moving average, which gets them into bearish territory. They're in their territory, and they're pushing through, trying to win this tug of war to bring this one down to newer lows. Because if it breaks through the support level fairly quickly, or at some point, then the tug of war is pretty close. The bears are starting to gain leverage, and the bulls are trying to stop it. But if the bears tear right through it, they could bring this one down to newer support levels and pull it further away from the 50-day moving average in a downward direction. So you have that small window to see if the bulls can reappear before it touches support and get back up, because that tug of war will be interesting, very close to the support level and the 50-day moving average, and that's very important. But I want to emphasize, pay very close attention to how quickly this is moving down, and if it breaks through the support level, how is the stock behaving and who is dominating the chart. Are the bulls trying to reappear, or are the bears taking over and tearing this one down? Again, the bulls need to break through 2195, turn that into a support so they can break away and hit newer highs and newer resistance levels. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell by turning on all notifications to not miss a single video that I post. Share this with your friends and community, and don't forget to hit the like button so that you let me know you watch this video. At the end of this video, there's going to be a pop-up video. In that video, I will be discussing about the S&P 500 index and how the market is being pumped. The Federal Reserve is pumping the markets, and on these scheduled dates, the S&P 500 index is rising up several points. I know that with those several points being moved, there are individual ticker symbols moving up with it. I mean, you can clearly see it in the charts. I go into more detail about it in the video, and I know that it may sound a little small what I'm about to mention, but the profits that you can make in individual ticker symbols as they rise up with the S&P 500 is anywhere from 30 cents to $3. I know it doesn't sound like a lot, but like I always say, if you put $1 into the market and you get back $2, you've done one phenomenal job, because putting in $1 and getting more than what you put in is what it's all about. As I always say, profits are profits. And I know that 30 cents to $3 per share may not sound like a lot, but when you add that up, it becomes profits. And like I say, profits are profits. So check out the video. I'm not there to tell you to buy, sell, or hold. I'm just here to inform every investor on the great news that there's an opportunity to maximize profits, minimize losses, and with the strategies shown in the video, the charts speak for themselves. You can see it, and it's definitely been happening. And I mean, on these scheduled dates, the S&P 500 is rising up, the index itself, and within it, there's individual ticker symbols rising up with it. Why not take the opportunity to put your money in so it can rise up with it too? Thank you guys so much for watching, and let's make some money.